Hey everybody, happy Sunday and welcome to another episode of the Trading Pit. Today we have 4 segments, 2 guests as always. Segment 1 is going to be the watch list with Chris Brecher. Segment 2 is going to be the broad market recap going over SPY, QQQ, IWM, and VIX. Segment 3 is going to be finding an edge with Mike Pisani, also known as Options Mike on Twitter. And then segment 4 is going to be chart requests. As always, sit back, relax, and let's get started. All right, everyone, into segment 1, the watch list. We have Chris Brecher here, founder of BrecherTrading.com, and we're going to talk about some of the features that he uses on TrendSpider, but most importantly, talk about some of the stocks that he's watching into the next couple months using these features. So, Chris, thank you so much for joining, and what do you have for us today?
Yeah, thanks for having me on. Just wanted to show you, I use very few indicators. I like your trend lines a lot, and I think price support and resistance is so important. That's why your heat maps are so cool. But all I'm using right here is an ATR trailing stop right here, ATR trailing stop, and the 31016 MACD, which I think you're using on a lot of charts too. And so,
I personally don't, but I think when someone who posts on our account definitely does.
yeah, I mean, it can be the RSI, it could be the stochastics. It's any of them where you see just overbought, oversold, or positive or negative divergence. So, I mean, that's what I'm using. So I'm using the ATR trailing stop. I'm using your heat map, which I really like. And of course, I'm using trend lines all the time and air holes. I call them air holes where you have lack of support or lack of resistance. Obviously, the lack of resistance right here. And now we'll see what happens. So I was just going to go over 4 stocks: gold, SPY, and how gold affects SPY. Then I was going to go over DBA, which is the agricultural commodity ETF, because bonds hate inflation. So then the 4th thing was the TLT, which is the 20-year bond ETF. So that's what I was going to go over. And first would be gold. So what I wanted to show in here is that you see this is obviously not 24-hour, but this gap down right here. So I'm going to go take that gap right here. It's all about the velocity. So you know that a lot of this whole thing with the markets has been the speculation with Robin Hooders and a lot of people day trading. What happens is if they get spooked in one thing, like a momentum thing, they get spooked in a lot of others. So when you got this gap down that day, the NASDAQ had its worst day in a week. So when this happened today, we thought the NASDAQ would sell off, which is what it did. It's almost like one momentum thing goes down, then the other ones go down. So where do we go from here? Well, the first thing is that ATR trailing stop. So as you see is in here is everybody tries to short on the way up. Now you had the break and you had where it got oversold on the bottom and it had to work off its oversold. So what we do all the time down here is it's how you work off the oversold condition. Do you go to all-time highs, which is what usually happens? This time it acted poorly. It couldn't retain that ATR trailing stop. As you see, the MACD is still right at 0. So it's not oversold anymore. So where could gold go? If you use your heat maps right in here. So I'm just going on the lack of support till here. I know that would be ugly and hardly anybody thinks it could go that far, but that's another 10 points on the GLD. So the first warning is going to be if it gets under here, and then it could go all the way to there. Now that might take a month or two, but beautiful was the doji right at the top. That's just so cool. So that was the one thing I wanted to show you when it comes to gold. When you saw gold get hammered, then you got to watch the QQQ or the SPY. Now, the reason I want to show the SPY is what's starting to develop in here. So a lot of what I tell subscribers, and it sounds counterintuitive, but the markets had to go to all-time highs before they could go down. I know that's a little weird, but that's the way it goes. So we were looking for a sell-off, and like you see down here, you started to get negative MACD divergence. Now that can go, I like to have 3 reasons to do a trade. So you can have negative divergence for a year, but then you had this just intraday, and I'll show you where I think we're going. Is you got that negative divergence, a lot of negative divergence in here. So now you have all this kind of support in here, this schmutz in here, so to speak, but you finally have a trend line. This is the first time I can remember in a long time. So let me take off the heat map. This is the first time in weeks that you've broken a trend line. I mean, everybody's been trying to short on the way up, like, so now you have negative divergence, but that's why I brought up the MACD, because down here, now it comes down to on an hourly, how you work off the oversold condition. So if right here gets violated, I'm going to be watching that real carefully, because then you could go all the way down to here and then fill the gap here. So that's what I'm watching right now. So all I'm doing is using basically just doing what you show on your heat maps, but then I'm also trying to show, look, you see the support here, you see the support here, and then you see the air hole. Yeah, that would be dangerous if you got that low. And that's the thing. So many people want to go and short it on the way up instead of short on the way down where the direction's known. Now, when I go to a daily chart, where could we go? So when you zoom out of that, you realize we've had just almost a parabolic move. So to me, you could go all the way to at least that candle, and that's about 331. And then you could get all the way down to here, 327. Now, the thing is, we're coming into a historically weak month. So September's the worst. I know everybody thinks of the crashes in October, but statistically, it's September that's the worst. So if it got to here, actually, that's probably pretty healthy for the markets. But there's a big, big thing that I think is important, and that's this that I was discussing with you earlier. The DBA, I actually posted this, this TrendSpider chart a couple of days ago. This is the agricultural commodity. So as you see, it's in an uptrend. A lot of times when the Fed is just goosing inflation, you're going to see that kind of rounding bottom like you see. The key for me is that thin zone that I put the trend lines. If it gets up to there, I think that that's a basket, DBA, of wheat, corn, a lot of different agricultural commodities. If you start seeing it pop, I really think that's going to make this, which is the 20-year bond, I think you're going to see the 20-year bond break down. So here's another example of something that's oversold under the Atr Trailing Stop, and it's how it works off the oversold. As you see, it's worked it off pretty poorly now. But the key in here, there are two big things. Is this one, which it already broke, sort of like the SPY. And the other one is here, is definitely where it is right now, that little support zone. So if it gets under there, that could get real ugly. And the reason that DBA matters is bonds hate inflation. I mean, the 30-year bond is so cheap, under 2%. It's basically saying that for the next 30 years, you're not going to have inflation. If that DBA spikes, that's going to spook a lot of bondholders. You could get it down to here, and then you might wonder, what's that have to do with the SPY? Because with all the virus news, and the SPY went to an all-time high today, it's just because people are expanding the PE ratios because interest rates are so low. So if all of a sudden that changed, you're going to have to change your model of the SPY of what to expect. Because right now it's 21 or 22 PE, but there's nowhere else to put your money. So but if that DBA breaks up, I think the Fed, number one, is going to put themselves in a problem of what do you do if there's inflation? And if that happened at all, yeah, that would really nail the SPY. And the other thing is, you got the election. I can't believe nobody is worried about what could happen. So there's a lot because of the Fed and because bond rates are so low. I think that people are going to get more worried the higher interest rates go. So that's where I
Definitely.
am with all of these.
What do you think they're going to lower rates one more time, at least the federal funds rate, or do you think that's going to kind of stay above zero?
I think it's going to stay above zero because of that DBA. I mean, I got to think that if I was Powell and I had up TrendSpider and I'm looking at DBA and I'm like, oh my goodness, if this breaks here, I mean, already we know the costs are going up when you go to the grocery store. But if it gets up to here, as you see, then there's nothing till here. So it's just like gold of the NASDAQ selling off the momentum stocks if gold goes down fast enough. If this just grinds up, it'll be okay. But if it has a spike, that's going to put the Fed in a big problem. So that's why, right now it hasn't mattered much. But everybody says it doesn't matter. Keep in mind when this started rallying, and then go look at the TLT.
And you mentioned that you guys are always looking at correlations, right? It's a lot of kind of if this happens and this happens type of deal.
Yeah, it was like today is Apple was leading the way, and all of a sudden the NASDAQ was going up and Apple wouldn't go up anymore. And so, all of a sudden Amazon wouldn't go up. And so our theory was if they can't go up and they're the things that have pulled up the NASDAQ and Tesla, then the NASDAQ could have a leg down. So definitely there's a correlation there. But also the other one, if the bonds really get killed, there's another correlation that it might help the banks, which might help the ES, but it'll hurt the tech stocks. So you'll get an unwind out of the tech stocks into the Caterpillars of the world.
Yeah. So you're thinking there may be some rotation to possibly kind of possibly save the S&P 500 if we did start to move down.
Yeah. The one thing like today, the only difference is that gold went down so fast, it usually pulls down the NASDAQ, which then spooks the SPY. So you don't get the rotation, you get everything going down.
Yeah.
But yeah, if gold stabilizes, let's say it goes down to that 1820 level, the GLD or the gold, but it does it slowly. Yeah, I think you'll probably see the ESs just hold up much better than the NASDAQ. So if those bonds have another breakdown, I definitely think that's going to affect the tech stocks. And it depends how fast they go down. Like today, when you saw Amazon down 45 and Boeing was acting great, there's a certain point where if Amazon and Apple go down enough, it's going to pull down the ESs, which pull down the Boeings and the JP Morgans, which is what happened. It just pulled down everything.
Gotta love the liquidation. Well, anything else that you'd like to go over before we end the segment? We really appreciate you going over the different watch list stocks that you're looking at. And I think we have a couple more minutes if you want to mention anything else, maybe something you guys are trading even into the end of August and, how exactly you're trading it. Are you guys focused on, options? Is it more futures? So for those that are maybe interested in your subscription service, how exactly can they learn about it, and what exactly are you trading that they may be interested in joining?
All right, the first thing that's nice is I use very simple indicators, so I'm not real esoteric. So I use the support and resistance, the MACD. I use support right here, and I'll show you what I mean on that. And a lot of times we look at bull and bear flags. And like everybody's been trying to pick a top. And as you see, it was a lot better short right here in the NASDAQ or right here at that red line when it broke than trying to anticipate for 2 weeks. The other thing that I thought you'd like this is called a negative reversal. When something goes down, and your heat maps are working great with this, it then rallies to your resistance in here, but the MACD is higher than anything up here. So the MACD is more overbought, even though the product is under the previous prices. That's a great tip off to short. And right here. So if you go in a 1 minute chart, you're going to see the little bear flag. So bear flag here, and so on. So it really works, these consolidation patterns. We're really into correlations and consolidation patterns. in here.
Love
Now,
it.
for the end of the month, right now, this is what I'm going to be watching. Is not, well, really, this is, to me, is one of the biggest keys you have is Amazon. So if you go into Amazon on an hourly or a daily chart, because everybody loves Amazon, obviously, and it looked like a big old breakout to, yesterday. So as you see, it went to your heat map. If it doesn't hold this zone right here, because it looked like a beautiful breakout right here at 32.50. If it doesn't hold there, that's a big warning sign, because all of a sudden everybody's going to say that's a double top. And as we know, Tesla, Apple, and Amazon have really held everything up. If this doesn't hold 32.50, it could go right to 31.80, right to your heat map zone. And I think that would that's the first breakout of any of the FANG stocks that fails. And I think that's going to be a big tell. So if that doesn't hold, then you got to watch this right there. So that's that 31.80, and they better hold that zone because it went up so fast. It could go back. It was up to, over 100 yesterday. So that's what I'm going to be watching, is the tells with Apple, Amazon, and Tesla. And one last thing, I think the top in Tesla is going to be when it's announced that they're added to the S&P.
Wouldn't shock me. I mean, it's just absolutely, the amount of money flowing into Tesla and all those stocks right now is kind of unbelievable. I mean, I think Apple added $1 trillion to its market cap since March over the last 5 months. So,
I
it's
find
just
that
crazy.
fascinating, because you think it's the law of just least return, that there's a diminished probability because it's so expensive. It takes a lot to move it, but it hasn't. It's been amazing. But I think a lot of that is also buybacks. They just borrowed $8 billion more to do dividends and buybacks. So that's what happens when money's cheap.
Absolutely. Well, we really appreciate you coming on today and talking a little bit about what you're looking at into the weeks and months ahead and how you're using TrendSpider to do that. And everyone, Chris Brecher, founder of BrecherTrading.com. Chris, thank you so much. And we really appreciate your time.
Thanks for having me on. Take care.
All right, everyone, looking at the broad markets into next week. Really not a huge difference in the charts from last week. And that's good, because we want to see how they played out and kind of see what worked, what didn't. In this case, SPY, literally perfect test of this ascending wedge support into the end of the week. And then we've got this volume shelf here that was also forming, and the price bounced off of it nicely into the weekend. And then we do have the weekly chart with the monthly Bollinger Band still overlaid here. And you can see that the price is still just kind of melting up right through them. Remember, Bollinger Bands can move. They're not stuck. If the price continues to go up, the Bollinger Band can continue to go up with the price. So definitely in the past, this has been an area where the market has pulled back, but it's not always going to be the case. So that is SPY. Going into the Qs, we've got the nice ascending triangle breakout that we were looking at last week. And if we anchor the volume by price from this capitulation point on July 24th, we'll see that we did have a volume shelf here as well, that the price was able to bounce off very nicely into the beginning of the week and didn't really stop after breaking out of that resistance zone. Looking at the monthly Bollinger Bands as well on the weekly chart, you can see that the price is way outside this area. But remember, as the monthly Bollinger Bands close, this can continue up with price. However, as we mentioned with SPY, this has been an area where price has pulled back, and we are going into September, which is seasonally a pretty tough time for the market. So we'll just have to see what happens, but we have to also take what the charts tell us, and the charts are saying up at the current moment. So IWM is one that did have some trouble this week. We did pull back right down to the Alpha Trends anchored VWAP from this capitulation point on July 31st. And you can see how well the price respected this on Friday. And then if we look at the Bollinger Bands here, we're nowhere near the top of the monthly Bollinger Band like we see on SPY and the Qs. However, if we turn the multi-time frame analysis off, you'll see here that we did test this previous area of resistance almost perfectly here. And we'll just have to see if this continues to hold into the end of August. Now, the last one we're going to go over is VIX, as always. VIX is kind of disappointing. We did try to break out here towards the end of the week. However, the price did pull back and into Friday closed near a low of the day. And then you can see on the weekly chart, we did not actually hit a new low here. So there was no more gap that was filling. Pretty much the gap was just tested again, but not filled any more than it was last week. So all in all, we'll have to see what happens. Last time we had one of these solid hollow candles here. You can see that we did continue down. Will that be the case again? We'll just have to see. But that is all for the broad markets, and let's move on to the next segment.
Hey everybody, Dan Ushman here, and this segment is called Finding an Edge, and we have a very special guest with us today, Options Mike, or as he's known in real life, Mike Pisani. Mike, thank you for being here today.
Dan, thanks for having me. Great to be back.
Absolutely. And for those of you who don't know, Mike's been on our show before. Definitely go back and check his last segment with us. It was great. So Mike, let's get into it. I think, it's a great way to start off just to talk about how you got into trading, what you brought you into this world, how long you've been doing it.
Yeah. So, former life, I was in sales and I was doing well and I started making money and I'm like, God, I need to do something with this money. And so I started looking at the markets, and it was just after the financial crash in 2008, right? So we just finished the financial crash. We were just coming out of it. And I'm like, wow, Starbucks is cheap, GM's cheap, Ford's cheap, and all these different types of things. And I started buying them in some of the leveraged ETNs for the indexes like the TQQQ and stuff like that. And I found that okay, I really like this. And then I said, well, how do I do better at this? Because I don't just like to buy. I was buying and holding. I'm like, what if I just day trade a little bit more? And I started dabbling into that. And then somebody said you should really look at options. And then I made my first option trade. It was on Zengen. I made like $2,000. I'm like, oh my God, that was incredible. And I knew nothing what I was doing, right? $2,000. And the next one I did is I bought $10,000 worth of Northrop Grumman, which is what I would have bought in stock. I bought in options, not understanding that, the power of the leverage yet at that point. And I ended up doubling my money. And then I realized that I really didn't know anything because at one point I'd lost it all. And then I figured I better go out and learn what options trading was about and how to use them more and get better at understanding how they worked and what they really truly were. And at that point I was hooked and started full-time trade. I've been trading, mostly full-time since then, and full-time now for 6 years.
No kidding. And you mentioned when we were talking before we came on that, you used to trade a lot of options, but now you've been trading a lot of stock. Can you tell us a little about that?
Yeah. So I find options can be harder to get in and out of at times. They're not as quick or as liquid, or sometimes you're fighting with the spreads and the market maker and you just can't get in and out as easily, or if it pulls, they make it very tough, especially on the more expensive names. So I started trading and using common stock, and especially off options flow. So, if you remember back last week, AMD was in play one day and they were sweeping. I mean, one of the first orders of the day we saw was they hit I think it was 2,500, right, 2 minutes into the day of the weekly 83 calls. And then the stock dropped on it. I'm like, I just wrote that down to all my members. I pushed that out, said, hey, watch that. That's a big order coming in. I think it was a Tuesday. And sure enough, the stock reversed. And then the next thing you know, the stock took off and had one of those massive moves, almost $4 on the day, which for AMD is big. And what I just started doing is just trading in and out of it with stock. And you just see them coming for it. They started hitting the 81s, the 82s, the 84s, the 85s. And you just see them. And if they keep coming for it with the options flow, you can just keep getting in and out of the trade with stock. Or you can sit in the options. And it just really kind of depends upon the market. The market's been very choppy lately, very whippy, right? These big intraday pulls. So when the market gets like this, I tend not to want to sit in things. I just, make money, get in, get out, put the money in my pocket. And then if it sets back up again, I'll jump back in on it. But, even like a day like today, there was some interesting flow, like FCX, they saw this big rollout, I think, of 10,000 of calls to the November 16s. And the stock took off really hard on that. Later on today, the PIN's November 38 calls got lit up with almost 13,000 of them. And I think they were, again, rolling out of, short-term calls that are going to be expiring. But it just shows you the power. It shows you to look at these names. It also gives you an idea of what you may not be looking at or seeing and say, oh my God, this name's in play. DraftKings today, they just hammered 3,000 of the weekly 38 calls in a couple minutes, and the stock took off right to 38.
DraftKings crazy.
right? Before we came down again on it. But my eye would not necessarily have been looking at DraftKings until I started seeing these, 300 to 500 sweeps coming in on it. And that gives me a reason to want to trade with this, because now I know I have a reason to get in. It's not just volume, it's showing me that there's momentum in the stock.
Got it. I think I speak for everybody who's watching right now. I'd love to see, you kind of walk us through some of your charts and kind of talk us through that. Would you mind sharing your screen for a minute?
Yeah, I'd be happy to.
Awesome.
So I thought I'd start with Apple, guys. And the reason is one of the things I love about your software is the ability to identify and put notifications on trends. And if you look at Apple, this long chart of Apple, this blue line is the 8-day moving average. And I love this moving average because for me, it's a very fast moving average. And when you're above it, you're very strong. And when you keep dipping to it and buying it, it's incredible. And if you look at this trend we've had, Apple was above the 8-day every day for the close, all the way from back in April, all the way to this day right here on July 23rd, where we broke it for the first time. And then you gapped up here, and now we're riding and holding again as we go to all-time highs. And one of the things I like about your software is I can come in here and say, hey, I want to create an alert, right? And, I already have one, so I'll hit edit it. Any touch of the 8-day moving average, give me a quick notification. It comes in, it tells me, hey, Apple just hit the 8-day moving average. And if it holds, I know I can try it off of there as a long. And that to me is just a fantastic way to be able to go in. You can put notifications on that. And, you can see Apple today, everybody's like, oh, Apple came in. Well, it's not even, look how far off the 8-day. It's not even there yet. And the other thing I love is the volume profile right away. You look at that, I could say, okay, when Apple was down here, I could see how much volume it had to work its way through. And once it cleared this area, you can see it's just been clear sailing, just not a lot of volume because there's nothing to the left.
Do you normally trade big names like Apple, or do you dabble in smaller companies too?
I tend to stay with the bigger names because you have liquidity and you have volume. And that's something I think a lot of people forget about is liquidity is the most important thing in any trade you guys are going to go into. But I will trade. I traded OSTK twice today. I had to hold on for dear life a couple times on both times when I got in it. But if you're trading name that is liquid and in volume, you have tighter bid ask. So the spreads on options or in stock are much tighter. If the market pulls, the stronger names will always show themselves to be stronger on the bounce back. And that's why you want to trade those. So what you're always looking at is the names that have bigger volume. Everybody loved names like Kodak when they had that massive parabolic move. Crazy. And I kept saying, don't get stuck in this thing, because if you get stuck, you're not going to get out easily. And sure enough, it went to 60, halted, and where's it back now? Down around $8 a share, right?
Yeah, it's an incredible ride. OSTK is a crazy chart, but Kodak is a crazy chart.
OSTK is nuts, but generally I try to stick to the bigger names. We were talking DraftKings, love trading that name when it's in play because that thing can move. And what I'm really looking for is whenever I'm going to take a trade, whether it's options or stock, I'm not looking for a name that's going to move 10 cents or 20 cents in the day. I want something that can move dollars. So if I get in, I can get in and out, make $300, $500, $1,000 quickly, get in and out, and then move on to the next trade, and then watch to see if it just keeps setting up over and over again.
Okay. So besides Apple, what are some other charts that you've been looking at lately?
Well, another one today was pins. And
okay.
We were talking about the flow on pins. And one thing I did here is on pins is you see this line I drew, and I have an alert set off of it. So as soon as pins took out the all-time high today, I knew it. And it popped up, and you can see here pins gave this nice little pop to its all-time high, and it didn't hold it. Now that's an ugly, ugly candle. So we want to check tomorrow. The November 38 calls, I want to make sure they held, they stuck. But you can see this name has had this incredible move, right? Here was your IPO, and here was your IPO high all the way back here, roughly 34.55. And we took that out on this great earnings trade, right? It made nice money on earnings that day. And after that, now you've been flagging. And today it tried to break out and take out the recent high. Just couldn't do it. Today was not the day for it to go. But I love charts like this. And I love being able to put alerts in there and say, okay, I know if it gets into blue skies, I want to be involved in this.
Now, do you tend to stay in trade for long, or are you like an in and out type of guy?
Lately, I've been an in and out type of guy. I think one day last week, the day Apple had that big move, I traded it 10 times in the same day. Okay. So very, very quickly in and out of it. Get in, make $300-400, get out, make another couple hundred, get in, get out. And always looking for little, breaks. I'll actually go from a daily to 5-minute chart down to a 1-minute chart if I'm very actively involved in a name to watch for breaks and reasons to get in.
That's interesting. I'm curious. Do you use the 1 minute chart just for like? Are you actually trading off it, or is that just to like get an entry or an exit?
No, I'll actually trade off of that. So what
Okay.
I'll actually do is see if I can pull this down here. Let's go with Target. Or let's go back to, let's see Apple today. Did Apple give any? Thinking about charts today. Give me a half a second. It was a tough day. Yeah, let's do Facebook.
Okay.
Don't
I
mind.
love Facebook. That's a great
So
stock.
Facebook today, you know, you guys, I love to see you put all this stuff in here, but sometimes I gotta get rid of it. Right. So this nice move in Facebook today. But you see right here, if you're active in Facebook today from the start, here's your 1 minute chart. See this big downtrend after the pop?
Mm-hmm.
And if you're, I know it's hard to see because it's at the end of it. There we go, better. Once it got back and it broke that downtrend, there was another trade back up. And that's what I'm looking for, a downtrend break here. And that gives me another reason to get back in it. And that's where I made my, right? So you have a break of this downtrend on the chart, comes off, pop, there you go. Now you're in it. Now you take it for as long as you feel comfortable with and you get out. And what I do is I just start trailing stop it and start moving my stop up right behind it. And if I get stopped out, I get stopped out green, I'm great. You know,
a lot of great traders I know follow that strategy. For those who are listening, right? There's no shame in, you know, trailing a stop up and locking in your gains.
You know, sometimes I get stopped out for a $10 or $20 win. You're like, well, okay, but it's better than sitting in it and getting reversal on it. The second time I was in Facebook was up through here when it put in the high, and I got stopped out, made money on it, and then, you know, look at it, never came back. So that's the purpose of stocks, and I think people always forget that you know, stocks don't always come back, and you know, if you don't have a stop in place, then you're making an emotional decision, and those are always the hardest to make.
Yeah. A lot of traders struggle though with stops, right? Because it's one thing to set a stop and it's another thing to actually get out when you hit it, right? You know, it seems like everybody can plan a trade, but then when you go to actually executing it, it's hard. How do you deal with that? You know, like, do you ever feel an inclination to double down when it pulls back and hits your stop?
So I will, you know, so if I get stopped out and it starts to look good again, I'll try it again. I'm not afraid to go back into a trade, even if I just lost some money on it, if it still looks good.
Okay.
That said, if I didn't honor my stop and I took a big hit, I'm less likely to go in because now I'm more just upset and thinking, you know, go find something else to trade.
Yep.
But what I do is I usually pretty much automatically get myself stopped out, and you know, that's the goal of it.
So you actually use a stop order in your broker?
Yeah, what I do is once I, you know, what I'm trading, once I put a trade in, I immediately put a stop. As soon as I get green, I move my stop higher. You know, I get up higher, I move my stop right to break even or right into the money. So even if I get whipped out, which happens sometimes, I still made money, and it's better than losing money.
Agreed.
And you know, as traders, our job is to make money on a daily basis, right? Every day, go in, try to make money, and that's really all it comes down to. So you know, I had a Google call spread overnight. I was in the 1600 by 1610 spreads at 60 cents.
Can you pull up the Google chart?
Yeah.
Awesome. I think people love to see a chart when people talk about trades, right?
Yeah, I agree. Let's switch this off of 1 minute though to a little less noisy to a 5 here. All right. So the reason I was in Google, let's actually go to the daily, make it easy. The reason I was in Google is because you had this big, powerful candle yesterday that woke up, right? You can see this nice big candle here, woke up, moved up nicely. And I said, I want to be in that. I think it can go further. And of course, we had the kind of a weak, wishy-washy open this morning. But Google flew. Right off the bat, Google popped. And what I did was I put a stop in on my spread at 70 cents because I was up about $1.25. So I had a nice little profit on it, not going to let it go away. But when I do spreads, because the bid ask on Google can get so wide, I put it as a limit order. In other words, you had to fill me at 70 or don't fill me. So what happens, of course, is the market decides to do one of its little wonky pulls. Google comes crashing in with it, and they don't honor my stop because they couldn't fill it, right? Because they couldn't get that exact number. So I'm sitting in it, and Google starts to bounce, and all of a sudden, I guess it sells at 70 cents. So I only made 10 cents on my spreads, but then it goes up to $1.80. And I'm like, damn it, because I forgot to take my stop out. So on the way back up, it filled me on the way out of it because I was busy looking elsewhere. But you know, what you do is you look for things like Google. I like to trade with spreads because I can manage my risks better than if I have sitting there and just straight calls.
Gotcha. So what indicators do you use besides that 8 EMA? What else do you have up here?
For me, I love the moving averages. So I have the 8 EMA and then the 21-day EMA, and those two
Okay.
are my go-tos. Let me go to the SPY real quick with you. Come here. There we go. And for me right now, what I notice about the SPY here on this move to all-time highs is, see how we're riding the 8 AMA nicely?
Mm-hmm.
With the 21-day, the red line, that's been the big area of support. So if you look here, tagged and held it. So for me, I'm still bullish on this market until we take out that 21-day EMA here, because that has been showing us to be strong support. And a pullback and hold of there would be very, very bullish in my opinion. Now, that doesn't mean I wouldn't be sitting in longs until we get there. It just means I'm more bullish inclined than short inclined until that moment.
That makes sense.
And I have my 50 and the 100-day and such.
Do you ever hedge your long positions with like a short or a put or something?
Yeah, sometimes I'll go in and I'll sell calls against my open stocks.
Okay.
Especially when I'm worried about it.
Cover calls?
Yeah, just cover calls. Sometimes I'll go buy puts on the indexes or buy some VXX. I love playing with VXX when volatility is in play. Unfortunately, right now, volatility in this market just are not one and the same. It doesn't want to go. So, this trend line is actually a good one because I have it drawn on my charts as well. And you can see until we can take out this trend line, there's just no play in volatility. So I
can move.
Yeah.
And the VXX, is this a leveraged product or this is a futures ETN? Okay.
No, that's an ETN. That one's not. But like UVXY is leveraged.
Yep. I've played with UVXY before. That's what I was thinking of. Fascinating. So, I'm curious. Do you ever buy and hold anything? Or are you a pure trader?
I have an account where I buy and hold stuff, and I have my account where I day trade and just trade out of it or swing trade out of there.
Got it. And are you purely technical, or do you ever look at fundamentals too? I noticed you had analysts on your screen at one point.
Yeah, I was looking at what some of those were saying over here. You guys, these are some great new features you guys threw in here in the last couple of weeks. I've been playing around with them. There are some names I do look at fundamentally. Like I have some longer term positions in names like GE and SGMS and Twitter, and they're not technical. Those are names I like. Point blank, I'm a little bit red on GE and SGMS, but not that bad. And we'll see where they want to go. Twitter, I've had long term. I've actually owned that thing since down around 14. I've traded in and out of that position now. I've always had a position in Twitter now for the last, I think, 4 years. But I've traded thousands and thousands of shares around that initial position, sell some on a pop, buy some back on weakness. So I think my price is somewhere around $27 now. Based on that.
Yeah, Twitter's the social networks in general in the COVID world are just bound to do well, right?
Honestly, I can't figure out why this name just cannot wake up for the life of me. And today actually was a nice day on it. There was flow on it today. You see it was trying to push up. And again, I love your volume profile because it's quick and easy for me to come in and say, okay, I know Twitter here, if it starts to break now actually above this 40 area, look how less the volume is, right? You don't have all this volume resistance where in here, there's a lot of volume that's traded and taken place. And you have buyers and so you have sellers, and there are buyers that have been trapped forever are probably trying to get out.
Exactly.
And
that's the best way to use the shelves they will tell you where the bag holders are.
Yeah.
Have you ever tried measuring the volume profile on just a move down or up? It's always a fun way to do it.
No, I've never tried that.
Try it one moment. It's the drawing to the very bottom one on the left side. But it's exactly the same thing, but you can measure from just a high to a low.
Okay.
And see where all the bag holders are, where the knife catchers, right, or the FOMO buyers were along the way up or down, which always blows my mind. So,
but I think Twitter is fundamentally, I think they're sound. I think they have a good future ahead of them. I think it's time though for Jack, honestly, to give up one company. Can't be CEO of two companies in this world anymore. Yeah. Two large public companies.
Very cool. So I'm sure people here are curious. Can you tell us a little bit about your service and just what you do besides trading your own accounts?
Yeah. So what I do is I run a service, and every morning starts around 6 o'clock, and I start posting news and events overnight and what's in play. Shoot a video every morning around 7:30 talking about what the setups are, what I'm looking at to play based upon news and events and earnings. And then we go live at 9 o'clock. I have a room. It's a Zoom room. Comes up. We're live until 4 o'clock. Every day we do a recap video showing what's going on my private Twitter feed. We're calling all the option flow trades, news throughout the day. And the nice thing about having a room, it becomes a kind of a community, right? So it's not just me calling things out. Everybody starts to contribute. The more comfortable they get, and the more they call out, and the more eyes you have on everything, the more names you come in and you see. So works real nicely there. And then on Sundays, I put out charts and I do a video of what the week ahead and what I'm looking for. So I try to get everybody prepared every week for what's going to go on. And then every day you get prepared in the morning and you get a recap at night to see, so maybe you look out and you go do some chart work on your own that night, figuring out what you like and what you don't.
That's awesome. Well, cool, man. Thank you again for being here. I usually I'm going to get yelled at if I go too much longer here, but I usually end off on just one question. I ask everybody I talk to the same question. So let's end there. What advice would you give to a completely brand new trader who's just looking to get started in this today?
Great question. One, start small. Two, find somebody you think you like and try them and just to learn off of and follow them, and let somebody that is teaching, somebody that's always talking. They're not hiding it. They're telling you what they're doing. They're showing it to you, and they're being very transparent. I think that's very, very important in this marketplace when you want to do it. But start small, and you're going to take losses. So just keep your losses small. Always keep your losses small.
Amen to that. Do you recommend people use simulators, or do you think it's better for people to just trade real money but small size in the beginning?
I always recommend people start off when they're first trading with paper trading or simulators, but you cannot put the risk in the heart palpitations you're going to get when something goes wrong or against you. Mm-hmm. And that's what people really need to learn to overcome. And so I would say start that shortly, because you're going to get filled when you have a simulator. You're going to get filled every time. Right.
And a perfect fill. You'll never have slippage, right? You'll get your price.
I mean, how many times have I been in an option trade where I'm trying to get out and I can't fill? And it's moving down. I keep trying to re-enter my order and I can't get out.
Yeah, I've been there. I was there a few days ago, so it can be tough.
Yeah. So I think you have to start small and learn that. But paper trading at first to understand things, I think, is a great idea. Awesome.
Well, there you guys have it. Mike Pisani. We'll put some links to Mike's Twitter and website in the description below. And we hope you all enjoyed this. Mike, thank you for being here. It's always great to have you on.
My pleasure, Dan. Thanks, guys.
Absolutely. And we're going to go right back to Jake for some chart requests now.
All right, everyone. Thank you, Dan and Mike, for that segment. We're going to move on to the chart request for the weekend, except we're not going to do any new requests. We're going to do the same thing that we mentioned on the broad markets. Go over the same charts from last weekend and see how and what played out, what didn't. As far as Apple goes, you can see we clearly broke out of this resistance we were watching last weekend and an absolute rip to the upside on Friday. And you can see here we did talk about that breakthrough of the longer term resistance on the weekly chart, and we just absolutely continued to blast off. I think on Friday we added like $80 billion plus to the market cap of Apple. It's just kind of crazy at this point, but there's people that still try to short this thing, and that's probably not hurting the case for the move up. Netflix is one that hasn't really moved at all, honestly. It's still stuck in that Alpha Trends anchored VWAP pinch. As you can see here, we pretty much did nothing last week. We did move up a little bit off that support area, but all in all, there really wasn't a ton of action here. And you can see that the weekly chart is looking a little interesting with, with this bullish candle here. However, we are just trading right between the 1.618 and the 2.618 extensions here. Going into, what do we have next? Tdoc. Tdoc was one that we talked about, the double blue raindrop last week, found by Pup of Wall Street. And we absolutely ripped right off of that area from around, let's say 190. We're now at 223 for the close on Friday. If we do anchor the volume by price, if I can find it, there it is. If we anchor that from this capitulation point here, you'll see that we did break through a pretty crucial area of support, resistance here, acting as a supply zone. So, this is like your ideal candle to look at the raindrop, right? We've got this big wick, but we want to know, was there volume actually within this wick? So if we turn on the raindrops, we'll see what is the case here. So in this case, you can see there was really no volume during the second half of the day on Friday. near the high of the day. You can see the first half of the day on Friday, there was volume at the high of the day showing buyers were in control. However, into the second half of the day, you can see that most of that volume was near the low of the day. So kind of supporting what we saw on the regular candle. Now, going to the weekly chart is nice because we can see essentially that the Alpha Trends anchored VWAP from that March 23rd capitulation point was a perfect area of support last week. And we had a really strong move up into last week. So going into SLV, we have a pretty interesting case study as well. Not a ton of stuff going on here, but this is something I want to mention. When we do anchor the volume by price, it's typically anchored from a breakout area, a capitulation point. So let's anchor it from this breakout area back in mid-June, or excuse me, July. And you can see the price is actually catching a bid here right at this volume shelf. And you can see not only that, but the raindrop was showing some buyers in control near the top of the range. And then you can see that the 2011 anchored VWAP from those 2011 highs did hold as well. And now we've got like this inside week forming into next week, and we'll just have to see what happens. But all in all, it did hold relatively well. And, you know, if they're going to keep printing money, this is probably not going to hurt SLV. Going into Walmart, this is a great case study on looking at the trend line resistance above. If we look at that trend line resistance from last week, and this has actually been a chart that we've had up for a while now, but you can see how perfectly the price respected this area above and then ended up pulling back. And we can see here, we were talking about that big volume shelf forming last week. We were talking about the raindrop showing some of that volume above the resistance zone. And then we had a 2-day gap or a 1-day gap up and then a continuation the next day until pulling back. Surprisingly, just kidding, right back down to this volume shelf. So notice on Friday, we did have a little bit of volume near the top of the range here. So that is something that shows buyers may still be in control into next week. Next one is Target, pretty much Walmart's little cousin or little brother or sister, whatever you want to call it. But this thing is just an epic case study on one, you know, just really the volume shelf here. So let's turn off the volume by price on this because we want to see it on the weekly. But if we do turn on the volume by price, remember we want to anchor the volume by price either from the low, or what's really interesting is seeing the volume distribution within the head and shoulders here, or inverse head and shoulders. So if we start it from this point, we could essentially see what was the volume distribution within this inverse head and shoulders. And you can see we did have that volume shelf forming. We can also anchor it from this bottom point here. And you can see that there's a lot of concentration of volume here, pretty much creating a launch pad for price. And that's exactly what it did into August, and it hasn't really stopped since. Going on to Lulu, talk about another volume shelf. Lulu had a really nice move up this week, or in the past week. You can see here, the volume shelf has really acted as a launch pad this entire time. If we anchor the volume by price from that March capitulation point, this thing has just acted as a perfect area of support and then pretty much a launch pad for price. Now, if we look at the daily chart, you'll see that we are kind of running up against this ascending wedge resistance. We'll have to see if that continues to act as resistance or if we pull an apple and just break right through. But all in all, a really cool case study on the volume shelf acting as a launch pad over the last few weeks. Really the last 3 weeks is when we broke out of that area, and it's really been up since then. Going on to D-Dawg. D-Dawg's another cool case study using the anchored volume by price and also the automated gap detection that we call the gap snake. So if we turn on the gap snake here, you'll see that the price action is definitely coming close to filling this gap. If we move this over, you'll see how well the gap has started to fill. We're pretty much almost there. And then if we anchor the volume by price from this capitulation point, we keep mentioning that, but that's where we're anchoring it from because that's where the status quo changed. You can see last week we were talking about the price bouncing off this volume shelf below, and looky here. We bounce right into the supply zone, and that's where we catch a little bit of supply. We'll have to see if that continues, but Just a really cool example from last week, continuing up off the volume shelf bounce. Now going into Fastly. Fastly was probably one of my favorite case studies using the Alpha Trends anchored VWAP and the anchored volume by price. Again, we can see that we've got the gap snake on. We've got this huge gap above here. Remember, this is automatically detecting the gap in price. We don't have to do anything. This is just me putting in gap above here, but the actual gap highlighted is done by TrendSpider on the back end. Now, the weekly chart is a really cool case study, as I mentioned, of using that confluence of the Alpha Trends anchored VWAP and the volume by price. Notice what I did. I anchored the volume by price from that March low, and then I anchored the VWAP from this breakout point, and you can see how well these two are working together to act as an area of support for price, a level of interest for buyers, if you want to call it that. Remember, nothing is support until it proves itself as support. As Brian likes to say, these are levels of interest rather than support or resistance. So, but I think it's safe to say last week this did act as an area of support because we did have a nice bounce hitting new highs from the previous week. Last one that we're going to go over is Caterpillar. Last week we were talking about that massive broadening formation on the weekly chart. If you see here, we can clearly see that that is still in play. So if we take off the volume by price here, you'll see we're still stuck in this area here. But if we go to the weekly chart, daily chart, you'll see that the ascending triangle that we were talking about did actually break down from that previous resistance. However, if you look here, we did actually bounce off of this area of support. Remember, we're using double trend lines here. If we were just using one of these trend lines, we may have not caught the entire area of price action acting as support, but you can see that we did have a bounce. Not only did we have a bounce, but we did have quite a bit of volume, aggregating at the top of the range on Friday, clearly showing buyers were definitely in control. So will we go test this area again above around the 140, 142 area? We'll have to see. But going into the weekend, buyers definitely were in control, shown by this big blob of volume at the top of the raindrop. So hopefully this helped everybody. I really like to go over these case studies or examples that we've already gone over, see how the price action has really respected these areas rather than just kind of destroying the charts and going on to something new. We're able to learn from the previous week how these areas acted either as support, resistance, levels of interest, and how the price action respected it. So hopefully this helped. Everyone have a great rest of your night and have a great trading week next week.